de Los Santos. It's 10:30 a.m. this Friday in Manila. We are about an hour into the last trading day of the month. Let's go straight to our top story. Metro Manila will transition into a more relaxed general community quarantine on Monday, that's June 1st, as the government further tries to restart an economy that has been heavily battered by the COVID-19 pandemic. President Duterte announced in a televised speech that NCR will be placed under a GCQ scheme until June 15. After more than 2 months of quarantine, that is one of the longest and strictest lockdowns in the world. Other areas that will be under GCQ are Davao City, the regions of Cagayan Valley, Central Luzon, and Calabarzon, as well as the provinces of Pangasinan and Albay. All other areas will be under modified GCQ according to Duterte. The president made the announcement just a few hours after the DOH said the Philippines logged 539 new COVID cases, the biggest single-day spike in over 2 months. The GCQ will permit the reopening of more business, but leisure establishments such as cinemas will remain closed. Public transportation will also resume, but unlimited capacities. In Metro Manila, Transportation Chief Artugade said the train lines are ready to open by Monday, but operations will be limited from 10 to 35% only. He said 300 to 500 buses will be deployed along the mid lanes of EDSA to augment train operations. The economy contracted by 0.1% in the first quarter after the entire Luzon was placed under an enhanced community quarantine in mid-March. The lockdown halted economic activities, prodding economic managers to warn of worse economic data in the second quarter. Lawmakers are now deliberating a number of economic stimulus bills seen to help the economy recover. NEDA Acting Chief Carl Kendrick Chua said the government might need an additional stimulus worth 846 billion pesos to revive the economy, which is seen to lose over 2 trillion pesos this year because of the pandemic. Now let's see how that bit of news with that shift to GCQ is going to move the index. Is it going to help it push the gains that we saw yesterday? Again, recall that the index climbed as much as 0.8% on Thursday's trade to 5,570.22. Question now is it lifting sentiments now that it's official, now that it's already set in stone here? As you can see here, the index still continuing that rally that we saw yesterday. It is now up 0.9% to 5,621.49. According to Teams and Securities' Darren Pangan, should this optimism be sustained, we might actually see a climb to 5,600 to cap the week. And as it stands, we are already above that level. Let's see, however, if we manage to sustain that throughout this last trading day of the month. Now, what does a shift to GCQ mean? Now, it's going to increase movement of people and goods. At the same time, work is expected to resume in most sectors and industries, but there's something that might actually pull sentiment downward. According to PNB Securities' Manny Lisbona, he is warning about a resurgence in the number of cases in the past days. In fact, like what we reported earlier, that's the highest single day spike, 539 cases reported in Thursday. If this persists, according to Lisbona, it might in fact force authorities to rethink that transition. He, however, still sees index still consolidating between the 5,400 to 5,600 level, especially if optimism continues. Then again, we might actually reach or surpass at 5,600 mark. Again, as it stands, we are at 5,621 as we speak. However, yesterday we did see net foreign selling continuing at 478.14 million pesos. But it's not just that. Exit of foreign capital also persisting here. Close to $660 million in hot money flew out of the Philippines in April, continuing that exit we saw back in March, still due to worries over the economic repercussions of the pandemic. This is the second straight month, albeit thinner, compared to the $961 million net outflow that was posted in March. But year on year, it's way wider than the $299 million net outflow that we saw in April of 2019. The BSP cited a number of factors here. You have that US-China trade negotiation, as well as the rising geopolitical tensions between the US and Iran. Also adding to that is uncertainty over concessionary contracts for water utilities, which may have in fact affected investor sentiment. Majority of those investments still went to the stock market, approximately around 91% of that. Banks, property, food and beverage, as well as holding firms are the primary stocks in which investors invested in, at least for the month of April. Let's try to take a look now. And speaking of the stock market here, let's try to take a look at our leaders and laggards so far, at least in Friday's morning trade here. You have a number of banks here, very interesting, gaining big, at least this morning trade. You have BDO, which is up 6 and 4/10%. There's also Security Bank now up close to 4%. And at the same time, Metro Bank, as you can see here, is also gaining. It is up over 2%. And that's after you have the BSP deciding it's going to ease RRR requirements, at least for a lending for big conglomerates. But one stock here that we have to keep an eye on, San Miguel Corporation, gaining 0.1% here. That's after they recorded a plunge of 91% in their first quarter net income. If you try to take a look at the figures here, net income, like what I mentioned, down double digits to just over 1 billion pesos. At the same time, you have net sales also declining as much as 15% to 214.1 billion pesos. Operating income is also down, or also plummeted 62% to 11.7 billion pesos. It's an across-the-board decline, really, for San Miguel Corporation. The main pullback, according to them, of course, quarantine measures. In fact, if you try to take a look at the business units here, double-digit declines for all of the units here. For their food unit, it is down 20%. Global Power is down 10%, and Petron, of course, like what we've reported on a net loss here, factors include factors really contributing to that net loss. You have drop in fuel demand due to restrictions. Add to that the price war between Saudi Arabia and Russia, sending oil price dropping. According to SMC President Ramon Ang, San Miguel is not spared, but they're going to focus on cost reduction and cash preservation amid the crisis. And now you have the conglomerate tapping bond market for debt payment and for working capital in the hopes of getting up to $1.5 billion. They are going to issue as much as $1 billion of perpetual securities. That is expected to raise as much as 25 billion pesos from that peso bond sale. Again, looking at the movement here of San Miguel, it is down 0.1% as we speak. Now, one other stock that we have to be keeping tabs on, Metro Pacific. That's after Sumitomo has just bagged a 34.9% stake in the Metro Pacific unit, Metro Pacific Light Rail Corporation, which has a 55% interest rather in Light Rail Manila Corporation. That's to the tune of 3 billion pesos, with a disposition of over 12 billion shares at 250 pesos per share. Just to give you an idea, LRMC is the concessionaire for the LRT1 project, while Sumitomo is one of Japan's largest trading and investment firms. Now, this acquisition is tantamount to a 19.2% economic interest in the LRT1 concession, according to MPIC Chairman Manuel Panglinan. He welcomes Sumitomo on board together with their other partners, AC Infrastructure and Macquarie Investment Holdings. But as you can see here, things not faring well here for Metro Pacific, at least at the start of the trading day. They are down over 1% to 2 pesos and 80 centavos. At least let's see how they are going to perform for the rest of the trading day. Here are other stories we're watching this morning. The House Defeat COVID-19 Committee has approved a proposal for a 1.5 trillion peso spending program over 3 years to create jobs and address slowing growth. The proposed COVID-19 Unemployment Reduction Economic Stimulus, or CURES Act of 2020, targets increased spending on health, education, agriculture, local roads, and livelihood programs. Meanwhile, Albay representatives and House Ways and Means Committee Chairman Joey Salceda says it intends to pass its stimulus recovery program before session adjourns. Salceda has already asked the president to call for a special session of Congress in order to pass critical measures for the economy. Now, that includes the Create Bill, which is the revised form of the SATIRA. The measure looks to reduce the corporate income tax to 25% from the current 30%. Now, Socioeconomic Planning Secretary Carl Chua is proposing reforms to the national budget for 2021 to 2022 to prioritize health and economic resilience. This will form the final stage of the government's response to COVID-19. The Philippine Star notes that these reforms include realigning the last 2 years of the administration's budget to roll out infrastructure projects with the strongest impact on economic growth, poverty reduction, and business confidence. On the forefront of this is strengthening digital and health infrastructure, housing, as well as water and sanitation. Aside from this, the economic team will also be pushing for structural reforms in 11 areas like agriculture, education, and public transportation. Chua says they are seeking these reforms to make the economy stronger and help us survive and do better in the new normal. More than 300 small private hospitals are in danger of closing down due to the impact of the COVID-19 pandemic. That's on top of the failure of PhilHealth to release insurance claims. This was confirmed by Private Hospitals Association of the Philippines President Rustico Jimenez, who claims that some of their members only have their emergency rooms left operating. Speaking to One News's The Chiefs, Jimenez said that about 50% of them are about to close since most patients avoid going to non-COVID hospitals fearing infection. Jimenez added that only 4 to 6% of their members have received payment from PhilHealth, which could enable small hospitals to continue operating amid the pandemic. That's despite the agency releasing over 13 billion pesos to 562 medical institutions as of May 20. Now that the transition to GCQ is set in stone for the most part of the country, including Metro Manila, starting June 1st, work and operations for most sectors in industry is expected to roll again. How can this transition present opportunities for brands and businesses to send a good message across? Now, to help us, let's pick the brains of Patricia Malay. She's the Senior Vice President and General Manager of Fleigman, Hillard, Manila. Good morning, Patricia. Great to have you here with us on the show. So let's kick things off. What was the trend like during the ECQ period when it comes to brand messaging and communication?
Well, obviously, it was very limited, right? A lot of our traditional media channels were curtailed. For example, one of the more exposed media channels that are available to especially Metro Manila residents was out of home. And with everybody stuck at home, billboards suddenly didn't have a lot of views. Of course, also even our newspapers. And I'm sure even Businessworld experienced that as well. But what we did see was an uptick in the use of digital. And in fact, there was an increase in Filipino streaming and switching to digital news, digital entertainment, for their information and for their leisure. And so what I think is going to happen is that digital will really continue to become a big cornerstone of our communications for those brands and companies that haven't or have been very conservative or hesitant about using digital. Now is the time. And I think that is really the message that everybody is seeing. We have a captured audience who are still largely stuck at home, and I believe even with GCQ, there will also still be still some slowdown in terms of full population coming back into the offices, into the roads and all of that. I think it's not going to happen right away. And so if we still have a large chunk of the population stuck at home, digital really should be playing a huge part in how you're communicating to your stakeholders.
Question now is, do you think, since we're pretty much transitioning to that new normal, will going digital also be the new normal for brand messaging communication? Like, maybe I'm asking, is it going to be now the new cornerstone?
Yes, that is absolutely correct. If it hasn't been before, it has to now. back in the back before COVID, BC, I think a lot of the companies still had the choice, right? Because especially for companies that are a little bit more old-fashioned and traditional, they will always still look for those traditional media channels. Also, they like that they see their news coming out of their broadsheets. They like that they see their news coming out of radio and TV. But I think what we're really showing and seeing is that a large chunk of our population is really stuck at home and using just digital to receive their information. And what we know of the behavior and the consumption of media of Filipinos is that they're not just consuming media from one source, meaning they might be looking at they might be streaming movies and YouTube videos from their iPad, but then they're also messaging with their friends on their smartphone, and then they also have their laptop. So if you have these multiple targets where you can capture your audience while they're even just at home, they don't need to step out. There are so many opportunities for brands and companies to really harness the power of digital, and it doesn't have to be complicated or even expensive. Something that every brand and company has control over is their own channel. So what we always advise is when you're looking at your media, your advertising and your communications channels, we look at it from the peso perspective. That's paid, earned, shared, and owned. And
Mm.
the easiest thing for every brand and company to control and to fix and to continually contribute to is their own channel. And what are own channels? Own channels are your websites. Own channels are your own social media channels. Own channels are emailers. So there's really multiple touch points that brands and companies can use to communicate now.
And at the same time, I mean, you did say there was an improvement in engagement considering the surge in social media use. But like you also admitted, that there are different materials or items being consumed online as well. So that primarily is how can brands actually cash in on that? Because not everyone, I would say, is pretty much consuming brand messages, communications.
Well, I think what we've seen with the data that we have is that there's actually an appetite for people to receive communications from brands, and
Mhm.
communications from brands can come from anything from information on how to get their products and services, or how to deliver, how to get to the store. Uh, but it can also become by means of promotion. I
Mhm.
think a lot of people right now are looking for deals. A lot of people are looking for those ways to save money, right? And I think while you were discussing the stocks earlier, we're seeing that it's rallying, but I think there's still going to be some hesitation in terms of consumption of goods. I think people are going to be very hesitant and wise, right, about their spending, a little bit slower in their spending.
Mhm.
So I think what's fantastic about social media now is advertising on social media is actually democratized, and you can go on your own social media channel, for example your Facebook page, and you can direct advertising to stream into your Facebook page. And the way Facebook has done it is actually very user friendly and quite idiot proof, so I think if you spend even a day or two on it, and just spend time learning the nitty gritty of it, it doesn't take much. And there's also a lot of tutorials that are available even on YouTube,
Mhm.
to kind of show you the ropes. So if you have a limited staff or even a limited budget right now, which is I think something that a lot of people are also quite concerned about, what we're saying is that there's still a lot that you can do if you
Mhm.
just focus even on your own channels.
D- the same, I want to ask you: did you notice a pause in marketing promotions for some firms, considering how the pandemic has been detrimental for many businesses?
There was definitely a pause, especially right at the onset. and then directly after. So for maybe a period of a month or a month and a half, there were a lot of brands, of course, that had to pause because of sensitivities. A lot of people were very, high tension over everything that they were seeing online. And there were some brands, that tried to take advantage or capitalize on these sentiments, and they were getting bashed, and not just brands but even influencers, and so I think that the general feeling then of brands and companies was that we would pause on any communications. But I think what we're seeing, especially in the past 2 or 3 weeks,
Mm.
is that brands are feeling a little bit more confident, precisely because there is an appetite now from consumers. There is an appetite now from stakeholders to get information, and to receive these messages. So, to your point, I think it's really important for all brands and companies to be constantly listening to their audience, to be attuned to their audience. And there's so many ways for us to do that, through social listening, even just a casual glance over what people are saying online. I think this gives us a good barometer of the temperature and the sentiment of people at the moment.
But how exactly do you strike that balance between making a sales speech without sounding insensitive or tone deaf or taking too much advantage of the crisis? How do you create that authentic human connection with your audience?
I think the thing that you really have to think about, and the thing you want to ask yourself is, do they need to hear this? Do they need to know this? Because if it's not necessary, you might want to hold off on it. So, what are the things that people really need to know right now? If you're a brand or a company, people want to know, are your products or services available? Where are they available? How do I get to them? Is this something that will give me savings? These are the information that people are really hungry for right now, and we foresee that this is something that will continue on even within GCQ, and limitations are lifted. People will continue to want to find out, how safe products and services are. Is it okay to go and visit the store? What kind of safety precautions is the brand or company applying for their sales staff, and to ensure safety for everybody? So as long as you're asking yourself, is this something they really need to know? And if you tick off all of those boxes, it should be safe.
Then, how much of a brand's performance now during the pandemic is going to affect how consumers engage or perceive them post COVID?
Well, I think something that we're seeing, and what I mentioned earlier, is really that you have a captured audience. So what they're seeing now is really something that they're taking to heart. And I think our viewers will agree, right, that every movement now of every brand and company is being stored into their memory. And so it's really difficult now to make a wrong move. So one of the companies that you mentioned earlier, when you were talking about your stocks, was San Miguel. And how Ramon Ang recently has been in the news for all of the good work that he has been doing. And so those are the kinds of examples of things that people are going to remember. The messaging that he was saying about how people are important, how the company will survive, but we just really need to continue to prioritize people. These are really strong messages. So while we saw that the stocks earlier may not be doing as well, I think there is confidence there that the consumers will rally around San Miguel, precisely because of how they treated their employees. So now is really the time to show, and to walk your talk, because people are paying attention. They're looking at how you're treating not just them as consumers, but your internal stakeholders as well. So you want to make sure that you really are showing your integrity, and really walking your talk.
And given that digital shift, there are now a lot of tools. So, what tools exactly are now at their disposal of firms to better communicate their messaging?
I think one of the things that you can definitely invest in, if you haven't yet, is social listening. There are so many opportunities that you can take advantage of. Whether it's something that you do on your own, or something that you engage other agencies to do for you. Social listening is so important because it gives you a sense, like we mentioned earlier, of the temperature and the sentiment of what people are saying. And now is the time to really be listening to what people are saying, because we really don't want to make any wrong moves. We want to make sure that what we're doing is something that's helpful, and
Mhm.
something that people will really consider as necessary. This is the time to make impact. So while there is a lot of caution and hesitation and fear, maybe from a brand perspective and from a company's perspective in terms of communications, I think for those that are brave enough, there is really going to be a lot of reward. So you really just have to make a calculated this initiative, a calculated execution, and you can't do that without facts and without data. And social listening gives you that. So if there's one investment that any brand should make, it's really on social listening.
All right. Thank you very much for your insights, Patricia Malay, Senior Vice President and General Manager of Fleigman, Hillard, Manila.
Thank you so much for having me. Take care.
All right, this time around, let's have a quick check once again of what's happening in the local bourse. Let's start off with the performance here of the index. As you can see here, is still extending those gains again after the president did announce that Metro Manila and other regions as well, in fact, most part of the country already transitioning to a general community quarantine or a modified general community quarantine starting June 1. Again, you have the index rising now 1 and 3 tenths of a percent above that 5,600 mark, just like what our analysts are saying. They are expecting the index, at least if they are, at least if investors are going to ride in that optimism, they are seeing the index capping the week above 5,600. And again, that's happening already at 5,642.04. Now let's try to have a quick look at our leaders and laggards here. Let me just refresh this a bit. Earlier, we did see Unibank leading our gainers for the day here. And it's still maintaining rally. Really, you have BDO up 6 and 6 tenths of a percent, together with other lenders here like Security Bank, which is up 4 and 4 tenths of a percent. There's also Bloomberry extending those gains that we've been seeing the past days. It is now up 5%. You have also a number of consumers here, like Robinson's Retail, starting the day in the green, up 3%. However, on the other end of the spectrum, you have a number of stocks here starting the day in the red. The likes of JG Summit down 1.5%. Another consumer stock here, Pure Gold, is also not having a good start to their Friday here. It is down 1 and 4 tenths of a percent. Like what I was mentioning earlier here, you have this bit of news here from the BSP. The central bank is now easing rules on banks' reserve requirement. In a circular, the BSP said it will start to count peso loans given to bigger companies that are financially strained due to the pandemic, this as compliance to RRR requirements. Now, loans to business units of conglomerates, however, are not going to count in this new circular. Also, asset size, at least for those firms in trouble, should be at 100 million pesos, excluding land, and they should be employing at least 200 persons. Business liability should be more than its assets, or gross receipts falling by at least 50%, at least for the first quarter. Now, off to another earnings report. This time around, let's take a look at To Go. This after they did manage to trim their net loss in the first quarter, attributable net loss of 108.9 million pesos. Compare that to the 369 million pesos they logged a year ago. But still, nonetheless, you have To Go suffering a loss due to reduced travel revenues, especially during the last 2 weeks of March when the enhanced community quarantine was enforced. Revenues also slipped by 6% to 5.16 billion pesos, dragged mainly by logistics and services, which plunged by 33%. They're saying they already have continuity plan in place. Yesterday, the stock managed to gain 0.5%. Unfortunately, this time around, the stock not doing so well. It is down over 8% to 9 pesos and 15 centavos a piece. Now, from To Go, let's have a quick check here of the airlines. This, of course, after that transition to GCQ, in which You already have PAL, in fact, making a statement saying that they are expecting travel to resume soon. As you can see here, PAL already gaining, as represented by the white line here. It is up 99 tenths of a percent to 6 pesos and 65 centavos a piece. Cebu Pacific, likewise, represented by the orange line here, already gaining. The last time I checked, over 12% here. They are now priced at 37 pesos and 70 centavos a piece. Make that 37 pesos and 45 centavos a piece. Again, things looking well, at least for the airlines at the start of the last trading day of the month. And that's a first look into the business days. This Friday, May 29, 2020. Catch us again next week at 10:30 a.m. I'm Just De Los Santos. We are One News.